Hello everyone, Namaskaram. The topic I want to discuss today is Accounting Standard 1, Disclosure of Accounting Policies for CA Intern. Here, you would be learning what is an accounting policy, how to select an accounting policy. Once you select, how these accounting policies are disclosed in the financial statements. Can we change an accounting policy? If yes, how to disclose the same? And also any specific points regarding fundamental accounting assumptions. All these things will be discussed today. First thing, what is an accounting policy? An accounting policy refers to specific accounting principles and the method of applying those principles in the preparation and presentation of financial statements. Many places in the financial statements, there are more than one type of accounting treatment is possible. For example, to value inventory, the company can choose FIFO method or weighted average method. For providing for depreciation, the company can follow straight line method or return on value method. So which method the company is going to follow is that company's accounting policy. Okay, great. So the company need to select their own accounting policy based on certain criteria. I cannot say I will follow straight line method because it is easy to calculate. No. To select a particular accounting policy, there are certain criteria. We'll look into the criteria now. So basically, for selecting an accounting policy, there are three major criteria which needs to be considered. Those three criteria are: number one, prudence. The company need to consider the prudence concept while selecting the accounting policy. What is prudence in the first place? It is also called as conservatism. We need to be careful basically. So, any future loss expected by the company need to be provided for. But in future you are expecting any gain, don't anticipate the gain, only consider when it is actually realized. For example, if a company has purchased land worth 10 lakhs and its value increased from 10 lakhs to 20 lakhs, there is a profit of 10 lakhs, right? But till the time I sell this land, I cannot recognize the profit. Okay, I cannot. But if the opposite happened, the company has purchased land worth 20 lakhs. For some reason, the value decreased to 10 lakhs. So this is an expected loss. This I will consider, while the expected profit I will not be considered. That is called as prudence. The second thing is substance over form. We also call this as substance over legal form. So the translated value is 10 lakhs. I paid 1 lakh and the bank paid 9 lakhs. Who paid more? Bank. But as I am using the car, the benefit is taken by me. It is still considered as my car even though the money is paid by the bank. So, legal owner is not relevant. Who is the person getting benefited is more important. Okay? Number three is materiality concept. All material facts relevant for the financial statements need to be shown. Sometimes an asset whose value is only 100 rupees, though it is an asset, it is not a very material item. So the company can choose not to show it as asset. Instead, the company can tell it as a expense. This is called as material. So a company should consider the three of these policies while selecting an accounting policy. Right? Yeah. So we know what is an accounting policy and we know how to select an accounting policy. So once you select a particular accounting policy, what next? These accounting policies which are used in preparation of financial statements need to be disclosed to the users. Then only the user will be able to make a better decisions. So where shall we disclose these policies? The standard says all significant accounting policies need to be disclosed at one place in the financial statement. So everything will be shown at one place only. Generally, it is shown in the notes to account. So the accounting policies will be disclosed in the notes to account. And whatever policy considered by the company should be consistently applied from one period to another period. So for example, previous year, we have followed straight line method for depreciation. We need to continue to follow straight line method even current year also and in future year also. There should not be a change. If at all there is a change, we need to disclose the change so that the user will know that there is a change. So, as I said, accounting policies need to be consistently followed throughout the period. But if you have to change the policy, when you can change? There are only three situations where the company can change accounting policy. Number one, if the change is required by a statute, any law is asking you policy, the company can change. Second, required by an accounting standard. So any accounting standard requires the company to change an accounting policy, then also it can be changed. And finally, the third one, for providing better presentation of company's financial position and performance. So, because if I change an accounting policy, I will be able to give better disclosures to my users. That situation also the company can choose to change an accounting policy. As I said, whenever there is a change, the company need to disclose that there is a change and the amount also we need to disclose. Right? When an accounting policy is changed, the fact of the change and the financial impact must be disclosed. As I said, last year we are using straight line method, depreciation was 1 lakh. Also, it would have been 1 lakh only. But because I changed it from straight line to written down value method, this 1 lakh has become 2 lakhs. There is an increase of 1 lakh just because of the change. So this fact need to be disclosed in the financial statements. Okay. Yeah. Then next topic. So we are going to disclose all the accounting policies followed by the company. But there are certain policies, there are certain accounting assumptions which are considered as fundamental. Those are going concern concept. So it is assumed that the company will continue a reasonable period in the future. Generally it is called as the company's next 12 months. It is an assumption. Second assumption is accrual concept. Accrual concept generally means transactions are generally accounted as and when they receive or pay the cash. For example, I have not paid rent for March. Still, I will consider the expense. I will show it as rent expense to rent payable. So that is the accrual concept. And finally, consistency, which generally means the same accounting policies are followed from one period to another period, ensuring comparability. Right? That's what we are saying. If there is a change, you are going to disclose. So while preparing financial statements, it is generally assumed that these three fundamental accounting assumptions are followed. Going concern, accrual, and consistency are followed. That is the assumption. So when you are following these three assumptions, the company don't need to disclose that they are following. But if it is not following, then the fact need to be disclosed. Okay. So which means for regular policies, accounting policies, disclose when followed. But for fundamental, when you are following, don't disclose. You need to disclose only when not followed. Okay. Yeah. So that is what is called as fundamental accounting assumptions. Okay. So let us do a quick revision before closing the class. First thing, what is an accounting policy? While preparing financial statements, in many places where there are more than one type of a treatment is possible. Like you can follow straight line method or return on value method. You can follow FIFO method or weighted average method. Whatever method you follow, whatever method the company follows is its accounting policy. And while selecting the accounting policies, company need to consider prudence, substance over form, and materiality concepts. And once the company selected an accounting policy, it need to disclose at one place in the financial statements what are the significant accounting policies considered in preparing the financial statements. Then changes. If there is any change in accounting policy from previous year to this year, the fact and its financial impact need to be disclosed. Then we have three fundamental accounting assumptions: going concern, accrual, and consistency. If we follow these three, no need to disclose. But if you don't follow, then the fact need to be disclosed in the financial statements. Okay. So this topic we generally get, if at all we are getting, you may get a 4 marks or a 6 marks theory question or kind of case based question. So study well, do a proper revision. If you like my video, please share with your friends who are writing CA inter examinations. Thank you very much, guys. Namaskar.